All right, welcome back, everyone. We are still on what we have been discussing about moving from zero to trader. And then we have captured mitigation, we have looked at trends, we have looked at how to trade in the day, looking at your different time frames and how to play around your time frames to get the trade. So if you have not seen these videos I've mentioned now, look up here, you're going to see a link. So you tap on the link, it will take you directly to the folder or the playlist where you have all the videos we have posted so far. And so let's go on with what we have today. So the other time we identify the bullish trend to be something that goes this way: high, low, higher low, higher high, higher low, higher high, higher low. And then, if for any reason price makes a move below here, that we have gotten what is called a change of character. So, this is a change of character. All right. So, if this would be a change of character, then it simply means you are now expecting price to make a move up here and continue lower to the downside. This is true. But from the basic information you have about market structure, as you start advancing in your knowledge and applying the things you have learned so far, you will start noticing other things about the chart and about the behaviors of the market. So if you went in blindly to trade in this order and then something like this happened, you would say, whoa, thought they said price shouldn't do this. And then when it does this, you will go ahead to wait for it up here. And then if it made this movement and then does this and continues higher, you will say, wow, it was a lie. Forex is not working. So that's why you need to know something more about markets and their actions. So pay attention to what we are going to discuss now. Just pay attention. Everything in the market moves because of money. Why are you in the forex market? You are there because you want to make money. And the other person who is trading is not trading for fun. He's also trading because he wants to make money. So everyone is looking for money. Whether you're going up, you're going down, you're doing this, you're doing that, you're looking for money. If not for profits, you wouldn't trade. So you're trading because you want money. The same way, whatever actions you take, whatever any other person does on the chart, they are doing that because they want to get money out of the markets. So, how do you handle that? You must be aware of it to understand what is ongoing. So, how do we talk about liquidity? In simple terms, liquidity is money. So, in market terms, when you say money, what you simply mean is liquidity. So, where is money on the charts? Where will you see money? Okay, when you take a trade, let's say it started up here, moved here, got down here, and then you traded it to the upside. What happened? What happened was that you took a trade here, you placed a stop loss here, and you placed your profit target here. If this happens, it means that your stop loss is for a start. If this market were to move against you, what will happen is immediately your money will be taken. So your balance will be deducted. It will be taken out of the charts, out of your balance, right? So if that is the case, it means that your stop loss is money. Where your stop loss is positioned is money. That's your stop loss. Once it is hit, your money will be deducted from your balance. That means you lost the trade, and the result is that your balance will reduce. That is money, and that is what the market is looking for. You were targeting this high. Why? Because someone sold from here and placed a stop loss below it. That's why you're targeting it. So, what happened was that the person actually sold here, placed a stop loss here, and maybe placed a take profit anywhere they decided to. But you, as a trader, based on your rules, you identified this area as a draw on liquidity. When we say draw on liquidity, we mean where prices will be attracted to. because it is usually moving in that direction to take that money. All right. So you are targeting that level, that high, because of what? Some people sold from that high and their stop losses are above that high. You are targeting that high for a take profit. At the same time, your stop loss is here. If this price action decides to, for a reason, come back down here, it is going to be attracted to your stop loss. So let's assume it made a move and you are expecting it to maybe stop here and continue higher. But for a reason, it went below your stop loss and then started going higher. What happened was that price took out your stop loss but protected this low. All right, protected this low. Then use your area, your stop loss, as the liquidity for that trade entry. So what you need to know now is that wherever you have placed a stop loss, price is going to target that level. So the best thing to do is once your profit level is hit, take out your profits and expect price to make a pullback in a counter direction. So why am I saying this? I'm saying this because structures as this are common on the chart. You see price do this, make a higher low, maybe make another higher high, and then we'll move down below this low and then do something like this to the upside. This is common. Do you know why? Because prices move because they are looking for money. So it can take out your liquidity in this order. This becomes liquidity for this level, becomes liquidity for this level to hold. So this level will hold on account of taking out these profits. This stop loss is here to then take it. That's why you don't need to be aggressive when you're dealing with the charts. So it has given this low and has also given this low. So how will you know which of the lows to take since you're on a bullish trend? That is where you engage your mid frames. There are things below here that need to be taken care of in form of stop losses, in form of take profits and stop losses of people, because those who sold from here placed their stop losses above, and this movement took out their stop losses. And then the people who bought from here buying higher had their stop losses here, so immediately their targets were hit. The market made the move downward to take out their liquidity. So it's likely that you're going to have market structure going this way: high, low, higher, high. But that is not the main low. Then it comes down below this to make a higher low, continues this way upward. This is normal with the market. So in that case, this is liquidity. This is liquidity. All right. And this turns to the low. The low. This turns to the low. You now see that. So the next low for the reference is going to be this. This is the next low. And this is likely liquidity. Now, why are we saying this? We are going to go to the chart so that you see how it works. So let's look at the chart. On the chart now, you're going to see something like this. Find out what's going on here. You can see this as a high, this as a low, this as a lower high, lower low, lower high, lower low, and then prices made a move up, clearing this high to this side, and then this movement has started now. You can see that. So if you were checking it based on this low, lower high, lower low, lower high, lower low, you would have placed your stop losses here. All right, the people who sold, they would have placed their stop losses here, targeting this low. So when prices made a move upward again, it cleared that high and then reversed. Can you see? So whenever you see trends, you see market actions, don't be quick to pick a high, don't be quick to pick a low. Always wait for prices to make their move and reverse before you can continue taking the trade. So next time, we will tell you why prices move in certain directions, how they make their targets, and the things they want to get. And we will also explain to you how, when prices have gotten their targets, how they make their reversals. So ensure that you're following it as it is going. So follow it. We have told you about trends. I've also told you about market structures, how they move based on time frames. Check out the videos, try to follow what is going on. So we are moving a little bit advanced this time because we will not remain at that elementary level forever. So make sure you're following it, digest it, ask questions to know what is ongoing on the chat. So if you have questions, please post on the comment section so that we'll address it properly. See you later.